Hello, once again, you are welcome to my Accounting for Beginners channel. There are those among you who are watching me for the first time, so it is proper for me to introduce myself to them. My name is Daniel Amwakum, an ACCA Chartered Accountant. I've provided accounting services such as bookkeeping and others, and also teach accounting more than 20 years. So today, we are going to continue the balance sheet. Let us get straight into the video. Those who have watched me before know how I teach. I teach by taking my student through simple notes that I've prepared, so that by the end of going through the notes, whatever subject that we thought will be well understood. Well, this is the second part of the balance sheet. We have done the first part. So if you've not watched that particular video, be underneath the video, click on the show more portion, then or section, then you can click on that particular video, the balance sheet one, and go and watch it. We stop at liabilities. So let's recap what we've learned in the video one. We define a balance sheet, assets, liabilities, and capital. We say that the balance sheet is what is the financial position of an organization at a particular point in time. We said that an asset is properties that the organization they owe in order to run the business to generate profit. The assets are in two parts. We have the current assets and the fixed assets. The current assets are the assets that they use to run the business within a year. Example is cash. Then the fixed assets or non-current assets are those that they are going to use to run the business more than 1 year. Example is building. Liabilities. Liabilities are those people that the business it can be an individual organization that the business will be indebted to more than the business will be indebted to within the trading period. We also have two types, the current and non-current liabilities. The current liabilities are those liabilities that are going to be paid within 1 year, and the non-current liabilities are those liabilities that is going to be paid after 1 year. Example of the current liability is what? Accruals. And the example of non-current liabilities is what? Is mortgage. And the capital is the owner's contribution towards the running of the business. That's the money that the owner will provide on that to run the business. So we add up all these things to prepare the balance sheet. So how do we prepare the balance sheet? First, you take the fixed asset, then you add up or sum up all the fixed assets. Then you take the current assets, you sum up all the current assets. Then you take the current liabilities, then sum it up, then deduct it for the current asset in order to get a working capital. When you get a working capital, then you add the working capital to all the fixed assets so that you get what? Capital employed by the business. And this will be financed by the capital of the owner plus what? Plus the profit generated within that particular period. So in a nutshell, that's what we've learned. So we are continuing from where we started. And as I said, please, with this particular subject, pay extra attention, because every accountant should be able to prepare a balance sheet. When you're accountant, no matter your qualification, if you are not able to prepare a balance sheet, no organization will employ you. Even when they employ you, they pay you well. So for as soon as they realize that you can't prepare a balance sheet, they will just start with that because you are hot incompetent. So please watch, and also go and watch that particular the video one of the balance sheet go and watch it over and over again. Why? Because accounting is a principle, and the more you learn it or you watch it, you become familiar and what you understand it well, and you can easily prepare a balance sheet. So let us continue. So liability. Well, when we say liabilities, what's the meaning in accounting? Those individual organizations that the business owed or is indebted as at the end of the trading period. Anything the business owed to anybody else apart from the owner, as I said. So all those people, individual can be organizing that the business will be indebted to within the trading period. And it's different from what they are owing the owner. What they are owing the business owing the owner is capital. But apart from the capital, anybody else that the business is owning is what? A liability. There are also two categories of liabilities, namely current and long-term liabilities. Current liabilities. These are liabilities to be paid within 1 year. They are, so let me pause here and explain. As I said, the liabilities, we have two types, the current and non-current. The current are those that are to be paid within 1 year. So let us look at examples. One, payables. Those that the business is indebted to and be paid within 1 year. So they are what? The payables. Okay. Accruals. Services. The business has consumed but has not been paid for. This is also be treated in future. Its inclusion is for the reason that it cannot be ignored in the balance sheet preparation. So all that I'm saying, the accruals are those services that the business they've consumed but they've not paid for yet, but they will make the payment in future. The reason why I'm including this, I will treat this particular topic later on, but the reason I'm including is that without its inclusion, we cannot prepare the balance sheet. Okay. Overdraft. Indebtedness to the bank for an amount overdrawn. Normally, at times the business will, when the business are in need of money, then they can approach the bank to let them withdraw more than what is in the account. So if they are in the account, they have maybe $5,000 and they need more money, more than $5,000, they can approach the bank. So the bank will come to agreement that, okay, then you can withdraw more than $5,000. Let's say $10,000. So the business, what they have is $5,000, but the bank can allow them to withdraw $10,000. That is what an overdraft. Short-term loans. This is money the business borrowed from the bank or other organization to be paid within a year with interest. So that one is they may owe a bank organization an amount and they will be paying interest on it. It's short-term, should be paid within 1 year. Now let us look at the format of the balance sheet and include the liabilities. We've done others, the exclusion of the liabilities. So let us look at the balance sheet now with the inclusion of the liabilities. So as I said, fixed assets, they are land and buildings, the amount involved, motor van, amount involved, machinery, the amount involved, fixed amount involved. Then you sum up all this, then you get this fixed asset figure. Then you take all the current assets, their inventory, the amount involved, receivables, the amount involved, prepayment, the amount involved, bank, the amount involved, the cash, the amount involved. You sum up all this, then you get this figure. Then you also take the current liabilities, payables, amount involved, accruals, amount involved, overdraft, amount involved, then short-term loan amount, you add up all this, you get the figure. When you get this figure, which is the total current liability, you deduct it from the current assets. the total of the current assets, that is from it. Then you arrive at what is called the working capital. That is the capital that they just is using to run the organization within 1 year. Then you add it to all the fixed assets. When you add it to the fixed assets, you get the what? The net assets or the capital employed by the business. So when you get the net or capital employed by you, then it is financed by what the owner's contribution, which is capital, and the profit generated. So the two, the capital, the owner's contribution plus the net profit will give you a figure which should be equal to what? The capital employed. When you sum up, you get your capital employed, then your owner's contribution plus the net profit. It is not equal to the capital employed, then it means you are wrong. Either you made a mistake in the preparation of the trial balance, because we use the trial balance to prepare the balance sheet. Either you made you made a mistake in your ledger, so that you have to go back and check everything, because the balance sheet should always be equal. The capital employed should be always equal to the amount financed by the owner. So let us continue. Now note, the total of current liabilities is the data from the current asset to obtain what net current asset or working capital. As I said, total current assets, then you deduct total current liabilities, then you get what? The working capital. That's what should be. That is. This is the total current assets. You deduct it from current liabilities, then you get what? Your working capital. This is the amount being used to run the business. Yes, that's the amount that is being used to run the business within a year. The working capital is then added to the total assets, and the result is what? Net assets or capital employed. As I said, when you get this figure, which is the what? The working capital, then you add it to the total fixed assets, this figure, so that you arrive at the capital, the net assets or the capital employed. Okay. This means the total monetary value of the resources that are being used in the business. This is the amount of money employed in the business, and is the same as the capital added to the net profit that they financed by. What I'm saying there, this figure is the same as what? Financed by the capital, the owner's contribution plus the net profit. So this figure should be equal to this. When it is not equal to, then you have made a mistake. You have to go back and correct it, either for the balance, for the trial balance or your ledgers. That is the amount of employed in the business, and this is the same as the capital added to the net. Okay. So we are going to look at an example, and as I said, we use a trial balance to prepare what? To prepare the balance sheet. So let us look at an example. From the trial balance of multi, prepare the balance sheet as at the year ending 31st December 2019. So this is the trial balance of multi trial balance as at 31st December. It has the particulars, that the transaction, the debit, and the credit. Please, I've made a video on the trial balance, so you can go and watch it. It can also be found by the link below. They show more sessions. Capital, $350,000. Cash, $15,000. Land and buildings, $135,000. Inventory, $25,000. Fixtures, $55,000. Receivables, $22,000. Machinery, $85,000. Bank, $60,000. Prepayment, $5,000. Profit for the year, $80,000. Motorbike, $98,000. Payables, $18,000. Accruals, $7,000. Overdraft, $20,000. Then short-term loan, $25,000. All with the trial balance should balance. So when you add all the debits, it's 500,000. And when you add up all the credits, it's $500,000. So we have a format. So we just insert the figures in the format. So there's a balance, multi-balance sheet for the year ended 31st December 2019. Land and buildings, $135,000. So let us look at it. There's the land and buildings, $135,000. Motorbike, $98,000. Motorbike, $98,000. Machinery, $85,000. Machinery, $85,000. Fixtures, $55,000. So that's the total non-current assets. So that's the fixtures, $55,000. So you have to sum all up. When you sum up all up, you get $373,000. Then we go to the current asset, inventory, $25,000. So this is the inventory, $25,000. Receivables, $22,000. Receivables is here, $22,000. Prepayment, $5,000. We have the prepayment also here, $5,000. Then you have the bank, cash in bank, $60,000. So we have the bank, $60,000. Then we have last item, which is cash at hand, $15,000. So we come here, we have the cash of $15,000. So we sum up all the current assets. The current asset is $127,000. Then we go to the current liabilities, payables, $18,000. Accruals, $7,000. And overdraft, $20,000. So we come here, payables, $18,000. Accruals, $7,000. Overdraft, $20,000. Then the last item, of the current liability is $25,000. So we just go to the last item there, which is $25,000. Then we have to sum it all. We have $70,000. Then we have to deduct it from the total current liability, which is $127,000. So $127,000 minus $70, we arrive at our working capital of $57,000. Next current or working capital is $57,000. Then we add it to our total fixed assets or non-current asset, which is $373,000, to get a capital employed of what? Get a capital employed of what? $430,000. This is funded by the owner's contribution, $350,000, and profit, $80,000. So let us look at that one. to owner's contribution of what? $350,000 and a capital of $80,000. So this is the capital employed, $430,000. It's equal to the owner's contribution, which is capital of $350,000 plus net profit $80,000, $430,000. So you see, it as balance. That means our books are okay. So that's it. Okay, let me. What I'm reading, I've already explained, but let me read it. The fixed asset summation is $373,000. It comprises of land and buildings, $135,000. So, as I said, the fixed asset comprises of land and buildings, $135,000. Plus motor van, $98,000. So let us go and look at the motor van. $98,000 with the same thing here. $98,000. The same thing. If I spend it, I'm just going through the notes so that you know what I'm putting there. Plus fixtures, plus machinery, $85,000. Machinery, $85,000. Plus fixtures, $55,000. So when you come here, the same fixtures, $55,000. The summation of all this is what? $373,000 fixed assets. So you sum up all the $373,000. Let us go. The total of the current assets is $127,000, comprising of what? Inventory, $25,000. So that's the current asset, $25,000. Receivables, $22,000. So plus receivables, $22,000. Plus prepayment, $5,000. Prepayment, $5,000. Plus cash at bank, $60,000. Cash at bank, $60,000. Then the last item of the current asset cash, $15,000. So the summation is what? Or the current asset is $127,000. So that's what I'm saying here. It's $127,000. Okay. Now, this is deducted from the current. Okay. Okay, so when we get this figure, then we deduct what? The total of what? The current liabilities, which is $70,000. Making up of what? Payables, $18,000. So we have the payables, the current liabilities, we have payables, $18,000. Then accruals, $7,000. So we come here, accruals, $7,000 plus overdraft, $20,000, and short-term loan, $25,000. So that's it. Overdraft, $20,000, short-term loans, $25,000. All is what? $70,000. All the non-current liabilities. Add up what is $70,000. So we come here. All the current liabilities is $70,000. Okay, when we get this figure, this is the data from the current assets, 127,000. So we got the current asset 127,000 from the current liability, $70,000. So we have the current assets of this total summation is what is $127,000. Then we deduct it from the current liabilities of $70,000 to arrive at our working capital of $57,000. So arrive at a working capital of $57,000 is obtained. Finally, the working capital of $57,000 is added to the fixed assets of $373,000, and the result is capital employed of the business of $430,000. So we take this working capital, $57,000, then add it to our fixed assets, which is $373,000. Then we get a capital employed of or net assets of $430,000. It should be equal to the owner's contribution and the profit. That's financed by capital $350,000 plus profit $80,000, making $430,000 equal to what? The capital employed. That's what I'm seeing here. $57,000 working capital plus the fixed assets of $373,000 go to the $430,000 being what? And the result is capital employed. So after getting all your capital employed, it should be equal to it should be equal to $400,000, which is equal to the owner's worth of what? Capital $350,000 plus profit for the year $80,000. As said earlier, this confirms the accounting equation of asset is equal to capital. That's it. The net asset is $430,000 is equal to the capital of $430,000. Please, I have a video also on accounting equation. You can click on the link below to go and watch that particular video. This is a short video. We've come to the end of the lesson. We have other things to add, but when you are dealing with the balance sheet, you take your time to go through gradually and understand it, and it's step by step. When you combine it, it cannot be treated in just a day. When you combine it, you confuse yourself. So it's a gradual process. So we've come to the end of the, anyway, this is the balance sheet of what? A balance sheet of an individual. Later on, I'll do a video on a balance sheet of a company. It's a balance sheet of an individual that are doing. So we have come to the end of the second session. We will continue again the third session, by going to the third session, we conclude the whole subject on the balance sheet. Please go through this video several times. Go through this video several times, and also you can even upload it and go through several times. The reason I'm saying that the balance sheet, it involves a lot. So, and an accounting per se is a principle. When you go through the principle several times, you understand it when it becomes familiar to so that you can do it. And as I said, any accountant who cannot prepare a balance sheet is not a competent accountant. Nobody will employ you. So go through, watch the video one several times, watch the second video several times so that you understand. And please, if you're a student and you are preparing for exam, sit down and learn accounting. Accounting is easy, but it's not easy. When you form the habit of everyday learning accounting, it becomes familiar to you and you find it so easy. Exams, you won't find it difficult to pass accounting exam. Well, you don't sit down and learn, it's stuff. And accounting is gradual. You should be building on it. So if your foundation, and I have video on the foundation of the accounting equation, double entry, and other. Please go and watch that video, because it's there. When you are putting up your building and the foundation is not strong, definitely the building will collapse. So also in accounting, if your foundation is not strong, as you build up, you see that it becomes more complex. So please, we have come to the end of the video. Please do this thing for me. Like and also share this video. It will really motivate me to do more. And also you have to comment. If you watch some of our videos, the mistakes that I've made in some of them, you should comment and let me know, so that I won't repeat them and give you better videos. And also subscribe. I'm always coming out with videos every week. Subscribe so that it can be sent to you. And as I said, I'm a chartered accountant. If you want somebody to do bookkeeping or provide other accounting services, you can contact me. Also, if you want to learn accounting, you can contact me. I have my phone number and email address underneath the video. You can contact me. And if you're a student and you are struggling with accounting, contact me so that help me. What gladdens my heart always is that when I teach a student and the student pass the exam, it really gladdens my heart. So I'm here to help you pass your exam. And as I'm a chartered accountant, being a chartered or passing accounting exam is not easy, but you need help. You really need help. So you can contact me then. I will help you. Bye, and watch us for my next video.